Mm. All right. Like we are going to discuss something about system trading, the risk and reward of a option selling system. So we are not going to talk about any of the option buying thing. It'll be a very basic introduction. So whoever is a option trader already or a systems trader already would not be able to get anything new from this. So the only starters thing that I have to start with is that the only way that am I audible, right? Is this audible to everyone? Anyone?
Yes, yes.
Okay.
Yes, Himanshu.
Okay. So the only way to win money out of a casino is to own one. Now, why do I call option selling system a casino? Because uh, the most of the games that are there in the casino, everyone has a bias towards the casino itself to win. Okay, so if there is a round thing where a ball is thrown, and there are red and black boxes, okay, in that, and there are if there are 30 red and 30 black, so people can bet on that, those 30 reds and 30 blacks. But there is one more, there is one white color box, that on that white color box nobody can bet on, and that white color box alone gives the casino such a big edge that it makes money in the long run. So more people play there, more they will lose. uh, Now, whenever an option chain is created, okay, suppose like 30 days or 80 days in advance, like whenever, suppose uh, suppose whenever it is created, it has got some time value. Now, what is time value? Intrinsic value plus time value is equal to the option price. Any strike will have the time value as well as the intrinsic value. Now, that time value has to be transferred in one way or the other to the option sellers from the option buyers. Okay, if there is like all the buyers in this room only, okay, and all the sellers in this room, so if all the buyers come with rupees 100 and all the sellers are with 0 rupees, that 100 rupees has to be transferred end of day, or when the option chain it matures, that those 100 rupees has to be transferred to option sellers. Now all the time value has to be given to the sellers. Okay, in the meantime, some option buyer might have like 200 rupees or 300 rupees in his pocket, but it doesn't matter. The cumulative sum of all the option buyers money has to be transferred to the option sellers. Now that is why the option sellers or writers has a very big edge in order to win this thing called profitability. And option buyers usually don't have this. So yes, let's start. So what is a system trading? Now, whenever you decide to deploy a set of rules, okay, through automation or manual, see, either suppose you want to sell a short straddle at 9:20 a.m. in the morning, okay, and you decide that, okay, fine, I'll be doing just one trade, that is 9:20 short straddle, and I'm going to put 25% stop loss, and I'm going to sit throughout the day no matter what happens. Now you just create a short straddle anywhere in the market, suppose at 9:20 at the money, and you just put 25% stop losses on call and 25% stop loss on put. Now the market can either take both of your stop losses, none of your stop losses, or any one of the stop loss, and market can go in one direction. So if it takes both of the stop losses, you will be in loss, but in other two cases you might be in profit. If one can like it can come out at cost, but if one, suppose, call stop loss is hit and the market reverses, but not enough to take your put stop loss, so you will come out with a small loss, or a considerable very small amount of loss on that particular day. Now, you can do this manually also, but you'll need to have all the capital deployed at the same time. And if you have, suppose my system, if you talk of my system, I take right now, today, not today, like in these times, after fin nifty started, okay, I'm taking 28 trades a day, okay, 28 28 rupees, 28 trades for a capital of 20 lakh rupees. Now it's not possible, because if you divide all those numbers, it will come above 50 to 60 lakhs. But but there are some overlapping trades and there are some repetitive trades. But it's not possible for me to go without automation into share market because I can't be able to handle all the trades that I'm taking. All right. So you have to have a set of rules, and you can go through automation or manual. Now, what are the ways of automation? You can either have Stoxo, or you can have your own Python code, or you can have TradeTron or Quantiply, all those stuffs which are there available online, and they can help you trade. I've heard that TradeTron has not I've heard, I've experienced TradeTron, but it has a trade delay of almost close to 5 seconds. Okay, and Quantiply in that sense is very good. So if a new person who's trying to start the automation thing, they can start with Quantiply at least, and then they can move on to you know um, getting their own proprietary systems on Python or any other language of their choice. So any two or more number of selling straddles or strangles with either different stop losses. Now, why I'm using straddles or strangles, it can be only calls or only puts also. Okay, but just because I do straddles and strangles, so I'm calling that. So any two number of selling of straddles or strangles with either different stop loss, entry time, or instrument is called option selling portfolio. Now it's very important to create a good option selling portfolio. Why? Because if you combine two or more trades, suppose you want to take a short straddle at 9:20 and another short straddle at 12:20. Now the chances of you winning is more, because see, if suppose 9:20 market, 9:15 market opens and you take a short straddle at 9:20. Okay, and suppose your both the stop losses are hit in that trade, and after that the market was absolute dead and it remained sideways throughout the day. So if you had a second short straddle at 12:20 or 12:30 with a larger capital base, of course, then what will happen? Your win probability on all the days will go high. So that is why you can combine two or more number of anything, like two or more number of, if I just tell you, right, I mean, if you have a capital of suppose say 20 lakhs, and you want to deploy like five straddles at any random given time with any random stop losses, with like five with big stop loss, and then 5 minutes later you deploy another five set of straddles with a very small stop loss. Okay, your system expectancy is going to hit zero point 0.5 or above. That is for sure. Now, expectancy term, it's a little complicated to be explained in plain words, because expectancy is it's uh, it's the thing which makes you profitable in the longer run, and it whenever it remains above zero point 0.2, you are going to be profitable in the option selling system thing. So it can be a system of equity buying or selling, future option buying or selling, or in intraday or short term. It can't be more than like 1 year and you call it a system trading. It can be a short term, but today we are only going to discuss about options, like how to short sell options and win it. Why options? Because see, option selling is the only unfair coin game. Okay, you buy a stock. Suppose you find a very good breakout opportunity in a stock. Okay, suppose say ITC. Uh, Suppose you just you're watching the charts, and then you find that, okay, fine, this ITC is going to blast from here. Okay, so what is the probability? What is the probability of ITC going in your favor and against your favor? That is 1:1. All right, so that is a fair coin game. Like ITC can either go up or either it can go down. But in case of a option selling thing, or a straddle or a strangle, whatever you do, if the market even stays sideways, that is also in your favor. If the market is going one, if the market is going one side, it's again in your favor. If the market is going up and then down, then only you are going to make loss. So that is why it is called an unfair coin game. It's not a fair coin. Buyers always are more poised to lose this game than the sellers. Sellers are like set to win this thing. Now, option selling, there is one very big thing that people sometimes miss. that you have the potential of blowing up the the trading account, blowing up the trading account in one single trading session. Suppose there is a flash crash that I have talked about it before, but if there is a flash crash, then what will happen is that all your capital will be gone in a single day if you are not running with proper hedge, and you are leveraged and all those things. So you will be left with 0 rupees on that particular day, or might even be in credit. So you can go negative also in your capital thing. So you have to somehow avoid those really bad days. Now I'm not talking about flash crash here, because that's like one situation which you cannot avoid and cannot predict as well. But normally what happens is your system is going to give you either a good profit or a good loss on some days. Okay, so you have to care about the good loss days. So you have to restrict that loss to somewhere. Some people keep it at 0.5%. I know many people who keep it at 0.5%. They play really secure, and their target for the day is 0.2% profits only. Okay, so there are people who keep it at 1% and then 2% and 3%. So we have all the people in this server only who are keeping like 1, 2, 3, and 0.5. So uh, so that is where you get to protect your capital from really bad days with M2M stop loss. Okay, or manual intervention. What is manual intervention? Suppose you somehow you are a very good technical analyst, and a very good VWAP reader, or you know uh, all those indicators which are there, MACD and all. So you see that okay, market is going to crack and it is going to be in opposite side of of your trade, or the remaining legs that you have. So you can actually take a call on that particular day to close the trade. But as seen before, the more you do it, the more manual intervention you do, the more you will lose money in the longer run, because you are not God, and nobody in this universe, including God, can predict the markets. Only the participants who are there in the market can decide the direction of the market. Now, backtesting. Why is backtesting very important? Because see, you need to first trust the system. And how to trust that system? You cannot simply say that okay, fine, I'm going to sell a call at 9:56 point 30 seconds, and then it's going to make money. No, but backtesting is very important in this case, because you have a set of rules. Suppose say 9:20 short straddle and 9:30 short straddle, and then every 10 minutes or 30 minutes you want to fire a short straddle. So you can just go and sit on the computer and take help of a backtest and backtesting engine. There are many backtesting, suppose like AlgoTest and StockMark and Backenzo. So you can use any one of them, and you can get your strategy backtested. And if it is giving a decent return, suppose 50%, sorry, not 50, suppose 20% return with a less than 5% drawdown in 1 year. Okay, then you can actually start doing that, including the slippages, all those values that you put. We are not going to like discuss anything about backtesting. I hope everyone knows about that. But backtesting, you can design a very good system with absolutely stunning results. Now, stunning results are somewhere close to like 50% return with a less than 10% drawdown. Okay, or 100% return with a almost 10% drawdown kind of thing. So, and the last point being, if you keep repeating the same thing over and over again, you will end up achieving the same historical result that was there in the drawdown. You might have a phase or two of, a very elongated phase of bad days. Sadly, I started doing my system trading in September. So I'm just 6 years old in this thing, and I actually had suffered a very bad phase from December till Feb, or December till Jan. So 2 months were very bad for me, but I kept repeating it, and now like everything is back on track now. I just today I hit my equity peak. There is 0% drawdown today in my account, and the thing is, you have to just simply keep repeat the same boring thing. It can get really boring, but it makes you money, and normally boring things only make money. So it's like a kind of investing thing also. In investing also, they say that if you keep it like boring, then you will make money over a very long period of time. So if you have to just keep repeating it, and you will achieve the historical result or the backtest result. But you have to keep in mind that the drawdown value should be less than 10%, and the returns should be more than 20%. Then you will be sorted, and nothing bad can happen after that. Now, when you're selling a lottery, okay, but I'm calling it a lottery because option writers are literally selling a lottery. Okay, people like, if I'm selling a, if market is trading at 18,000 and I'm selling a 20,000 call option, that means I'm selling a lottery saying that okay, markets cannot, or markets, if it crosses 20,000, how much ever extra it goes from 20,000, I will pay you back that money. So we are selling a lottery, and then suppose tomorrow in India and in the whole world, income tax gets abolished. Okay, Russia, Vladimir Putin goes to Ukraine and then hugs the president of Ukraine, and many good things will happen. And suppose market goes like 20% for 5 continuous days, so you will end up losing big, and that lottery can make you bankrupt. But then protecting capital is very important. Like it, you have to do only one thing, that you have to limit your loss. Okay, you have to limit your loss to less than 1%, 2%, or 3%, or to whatever idea that you have in your mind. Now, people might, when I started doing the system, okay, let me just tell you the story of mine. When I started looking for systems that can be traded, I came across a system which was 15% drawdown with like 60-70% return. I was like, yeah, 15% is very good, because I had been into investing from like past 5 years, and I thought that 15% is very good. I've seen it a lot number of times in my portfolio. That my portfolio was 15% down during 2020. It was 50% down, okay, or 60. So I was like, yeah, 15% is very good. Like in 2020, it gave me 15%. So like in place of 40, it gave me only 15. So I was very happy with that. And but I didn't start doing that system exactly. And then I came across as I just I made it better, 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 and then ended up with a system which is close to 5% drawdown. Okay, 5% historical maximum drawdown. And in December, that 5% maximum drawdown got breached, and I reached 5.3% drawdown in December. So what happens there is, when I was thinking that I am going to be comfortable in a 16% drawdown or a 15% drawdown, I was literally, very scared during those times when I got 5.3% drawdown. Okay, because I started thinking that whether I will make money in future or not. That 5% drawdown gave me a real big scare. But I kept repeating it, and I kept repeating it, but I reduced my lot size. Just yesterday we had a call about trading psychology. I've added a few points in the last slide, so I'll come there. So repeat it, and if you want, you can reduce your risk by reducing the size, or so till the time you are comfortable with your drawdown, or suppose say when you reach 5% drawdown, or when you reach suppose 3% drawdown, then you can half the capital till you reach 2% of drawdown. So if you keep repeating this like in under 1%, you will end up making a good amount of money. So now, once you do the back test, okay, and if the parameters of the back test doesn't match your real trades, okay, then you might have to bring necessary changes to the system, which is very tough. Now, what do you mean by that? So, suppose 1 month profit. Suppose you start trading in March, and then you go and you backtest the system, and if the backtest is showing minus 50,000 rupees, and you have made close to 50,000 rupees in March, trading the same system, okay, then you are like delinked from the system, or you have backtested the wrong system online. So you have to figure it out somehow, that the backtest should kind of match. Not every day, not every day, but like on a month to month basis, the the returns and the drawdowns should be able to match with your actual trades which you are going to take. Now, drawdowns can go to 2 to 3x of the historical maximum drawdown. You don't have to be very scared in 2x. Okay, I got scared in 1x, that's different, but you don't have to, get scared till you reach 2x of the drawdown. But 3x is a really bad scenario, and if it manages to reach 3x of the system, then you can start thinking of ditching that system and switching to something else. So if you have like suppose say 5% and it reaches 15% drawdown, then you can think of changing or updating the system to current market scenario. I mean, you should have a little understanding of the market, like what is it doing in in these few days, and then you can maintain a journal saying that at X time I got a slippage with X candles. Suppose it 20-point candle gave me a stop loss of 50 points. So all those things you have to at least know or be aware of when you are designing a system. Not in the beginning, but when you started trading that system, and then you can update the system based on those things, that what changes you can bring. Now people normally say that during this low VIX thing, the the candles are spiking. Okay, the calls and puts, wherever the market is moving like in a very small range also, then also the candles are spiking on many days. uh, so I actually, I my system doesn't have a single option based stop loss. It has all index based stop loss. So I sometimes I get, in one trade, if I am supposed to come out at suppose I sold a call at 250, market goes up and breaches my stop loss, and I was supposed to square it off at 300. Many a times I see that my trades get exited at 400 rupees. But yeah, those slippages are very less compared to one fixed stop loss system that is there in the that is there in the system. And over a long period of time I face very less slippage when compared to a option based stop loss system. But that is one thing. But I'm just saying that how you can edit all those things when you are under a drawdown, or like when you reach like 2x or 1.5x of the drawdown, then you can start thinking of how to make it good, how to make it even better. And you should not backtest for like 1 year or 1.5 years. You should backtest for a very long period of time, like 3 years, 3.5 years, so that you cover many phases of the market that were there in the. And like in 2017, 19, 20, all these years were very different. Okay, 2020 we had a 80 VIX scenario. 2019 it was very low VIX, just like right now what we have, so 11, 12. But the markets were not moving so violently like in these days. Okay, like today it was very calm, but yeah, on other days, like in December VIX was very low according to the moves that were there in the market. Okay, so let's go ahead. So any system with 20% annual return with a less than 5% maximum drawdown is a very good system. You can start doing that. But 20% is a very conservative number. You should aim for at least somewhere close to 50%, so that even if you miss the stars, you land on the moon. And if you manage to make 20 to 30% per annum, post all the taxes and charges and brokerages, and then you are good to go, because 20% CAGR is very tough number to achieve. So yeah, 20% is very good. So what is the reward in this? So once you automate everything, you become a M2M trader. Now you have to only look at the M2M now. Okay, so like what most people do is they look at the market and then they trade. So what system trader do is they trade first, and then they look at the M2M. Then they come to know, okay, what market is doing. Okay, sometimes you might see that, okay, fine, when with every green tick your PNL is going down. So automatically you will come to know that, okay, fine, my system right now is bearish on the market. Okay, so, and when if it is not, the market is not continuing to be bearish, so you have a call side stop loss in that system. So once the call side stop loss is hit, now every down move will give you losses. Okay, so now you are bullish on the system. So it goes like that. So now you become a M2M trader, and you have to take a M2M stop loss. So every time that M2M stop loss is very 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 important, because you have to protect your capital from all those bad days, and or a string of bad days. Okay, suppose you are taking a 3% a loss per day, and you have a continuous 5 days of M2MSL, then you are 15% down. So you have to protect your capital. Now, if the backtest is profitable and has a higher expectancy, then you can keep repeating everything and you will be profitable. Now, what are the challenges here? So, discipline is the first and foremost challenge, which I also faced in the beginning when I started it in September. On many days, I used to see, 0.2% profit and then book it off. Okay, and because just the previous day I had seen 0.2% profit and then 1% M2M stop loss. So I thought that fine, everything is going to repeat now in future. It didn't happen. I ended up being in loss in the long run. Now you have to be disciplined. Okay, no matter what. Like now I have reached a state after doing the system trading for 6 months. Now I have reached a state that I don't even I forget to check the M2M very frequently, and like I am in office or night shift, I'm sleeping, and I'm doing all these things. So even if I don't check or anything, no, I feel very happy that without me checking it, okay, without me looking at my M2M is going big. Now, what is it? It's not me looking at the M2M screen is making it grow, or my conviction about the market. See, because when I'm system trading, I cannot adjust my trades. Okay, you cannot intervene manually because everything is there in the system. Okay, or all the trades are fixed, the times are fixed. If you are trading on an indicator, the indicators are fixed again. So you have to be disciplined. Okay, because if you are disciplined and then and the trade is going against you, you have your M2M stop loss. So if it goes wrong, you can come out with a very small loss of 1% per day. Okay, but if you're not disciplined, it's going to hurt you in a very bad way in the long run, and you are going to not achieve the numbers which are given by the system in the back test if you're not disciplined. Emotions are very important here because again, after doing 6 months of trading, I felt that emotions towards my M2M swings has come down. Previously, I still remember it was a Wednesday and I saw 20,000 rupees for loss for the first time. Okay, a 20,000 rupees loss, that was close to 1% of my capital, and I did not eat or eat lunch, and then I skipped dinner also that day. So that was the emotional state at that time. But now, if I get a 20,000 rupees, I won't bat an eyelid, and I will just continue doing what I was doing. Like next day is a new day. So to remain watchful, this is another challenge. And now connected with the status of your system. Suppose you are running a Python code on AWS, okay, and somehow there is a bug, or your CPU usage crosses 100% or something like that, so that your code is now slowed down or hung or something like that. So you have to be connected with the status of your system now. uh, if there is something wrong, then you can stop the system and then you can skip that day, rather, like whether be it profit or loss that day. So if the system is at error, either manage the trades manually or close all the positions if you cannot manage them. So I am always in the last line, so I cannot manage my own trades. So I prefer to select all and close all. Now, this was a very important last point, which was given by a person called Swapanda. Okay. So he said that risk management. So if you have a very good risk and money management, even the outcome of a toss of a coin can be used as a signal for option trading. Okay, suppose you just go to the market and you toss a coin and you say heads means calls and tails means puts. So if you keep a stop loss of 0.5% on that particular trade, and then you go and buy call and buy puts, okay, so you will end up making money. Okay, so risk management is the topmost challenge of system trading. You have to protect your capital. Okay, so the other set of challenges which was added in the like after the last night's call was decide everything. Okay, literally everything before deploying the system. That what would you do if you reach 2% of sorry 2 times of maximum drawdown in future? Okay, MDT is maximum drawdown. So what would you do if you reach two times of maximum drawdown in future? Suppose you do a start doing a back test and you see that you have a maximum drawdown of 5%. So what you will do if you reach 10% of the maximum drawdown? When I deployed my system, I thought that I will never reach my maximum drawdown because it was in February of 2020, which was COVID and market fell 40%. But December, it gave me a maximum drawdown and it breached that previous maximum drawdown. So I didn't have any plan on that particular time, so that what will I do when when I breach my maximum drawdown? When would you compound is the second point. So suppose you are getting profits, okay, you are getting like 5% a month on your capital of say 10 lakh rupees. So in a month you're going to make 50,000 rupees, and then another month you're going to make another 50,000, so that's 1 lakh rupees. Now you have enough capital to sell another lot of, suppose say, Nifty with a very far hedge, or Fin Nifty. Okay. So when would you compound? So you have to again decide it before deploying the system, that okay, fine, if I have my basket lot, suppose your one basket is costing 10 lakh rupees, and you're going to compound after you reach that 10 lakh rupees in profits. So that is basket compounding. If you are lot compounding, then you, whenever you reach the excess one lot capital, you can put that money into play, and then that would make your system compound on that capital which you have made profits on. Okay, so this is the second method is a slow compounding method, or it's not slow, but you won't feel the pain in a very long run. Suppose you are doing 1x of 10 lakh rupees, your MTM stop loss is 10,000 rupees in minus, and you suddenly decide, you take your savings and you put 20 lakhs or 30 lakhs rupees in the system because it was doing good. Now your MTM stop loss of 1% will be 30,000 rupees, which you have never seen ever in the past because you were always trading with 10 lakh rupees. So that's going to hurt your psychology in a big sense. So it doesn't matter whether it's in percentage term is just 1%. You won't be able to convince your mind saying that it's only 1%. Okay, so you can scale up slowly, and then slowly you can just go up, because you need to keep your psychology in track with the number of or with the capital that you have. Okay, you cannot simply, I cannot, suppose I have a capital of 20 lakh rupees, I cannot go and trade with 1 crore tomorrow, because if I see 1%, that is 1 lakh rupees. I have never seen a loss of 1 lakh rupees in my life, so in a single day. So that's not possible. Okay, so you have to compound slowly. That's my idea of compounding. Okay, so what would you do of the profits that come out of the trading? Either compound it with trading or compound it with investing. I'm buying some bees every day. Okay, so those bees are it's there in my holdings, and then I pledge it, and then I trade on that capital also. I mean, I sometimes use that pledged amount. uh, third is that you can withdraw that capital, and then you can keep it in a bank account so that it's safe, and whenever you are in a drawdown period, you can use them, or you can withdraw your profits and then spend them. So it's all up to you. I think that's it.